Hello everyone out there, how are you all doing? I'm Kate Hill, bringing you the best and unbiased and honest content on property, along with some fantastic hints and tips and area and location reports. Stay tuned today to hear about how Donald Trump's trade tariffs could affect the Australian property market. So Donald Trump's recent imposition of sweeping tariffs has introduced significant uncertainty into global markets with implications for Australia's property sector. The fallout from this is ever-changing and changing frequently. This video will probably be already out of date when it's posted, but here we go anyway. Trade tariffs tend to destabilize global markets, and Trump's renewed push to tax imports from China and allied nations like Australia has rattled investor confidence. In times of uncertainty, both homeowners and investors often pause major financial decisions, including buying property. Consumer confidence in Australia dropped 6% in April 2025, according to Westpac, with a sharper 10% fall immediately after those tariff news items. This drop in sentiment could result in fewer property transactions in the short term as buyers and sellers adopt a wait-and-see stance. For investors, particularly those using leverage, the perception of increased global instability could trigger more risk-averse behavior. Many of Trump's tariffs are aimed at manufactured goods and raw materials, especially steel, aluminium, electronics, which Australia imports and exports at scale. Tariffs on Chinese and US goods could increase the price of key construction materials. Builders already struggling with thin margins may pass these costs onto consumers, pushing the price up of new dwellings. This could worsen Australia's housing supply shortage, especially in those affordable housing segments, as developers shelve or delay projects due to that tighter feasibility. For property investor, this might mean higher acquisition costs for new builds, increased competition for established properties in key growth areas, because it's not bad enough already, tighter rental supply, which could benefit landlords in high demand rental markets. Australia's property market has long been a safe haven for international capital, particularly from Chinese investors. If Trump's tariffs escalate trade conflict with China and Beijing retaliates or tightens capital control, it may reduce outbound investment from Chinese nationals. Now, Chinese investment in Australian property dropped 15% in the last financial year, and this trend may accelerate under worsening global trade tensions. Now, overall, the effect of foreign investment on the Australian housing market is really relatively small. It's always a big news item, but reduced foreign demand might ease price pressure in premium urban markets like Sydney and Melbourne, but could also slow down development activity due to less offshore funding. Global trade disruptions typically affect exchange rates. If Australia's export sectors like resources and agriculture are harmed by retaliatory tariffs or reduced demand, the Australian dollar could weaken further. The weaker Australian dollar may make Australian property more attractive to overseas buyers, but only if foreign capital flows remain open. On the upside, slower economic growth caused by external trade shocks could prompt the Reserve Bank of Australia to cut interest rates further and further to stimulate domestic activity. So what does all this mean for investors? Lower interest rates could improve borrowing conditions, which encourages property purchases. However, low rates alone may not be enough to override broader uncertainty. Regions that are tied closely to trade, especially those resource exporting states like Western Australia and Queensland, are more likely to feel the economic pinch if demand for their exports declines due to that tariff escalation. Towns dependent on mining exports to China, like the Pilbara, central Queensland, may see reduced employment and migration, softening local housing demand. Conversely, diversified urban centres like Sydney, Melbourne, Brisbane, they may prove more resilient, they tend to, though the prestige and commercial markets might remain sensitive to those global capital flows. What's the long-term outlook? While tariffs are disruptive in the short term, they also shift long-term global economic alignments. For example, manufacturing relocation from China to Southeast Asia or India might change Australia's trade relationships and foreign investment sources. If Australia forms stronger regional ties outside of the US, the China sphere, so the US-China sphere, new growth corridors could emerge, and that's a good thing, particularly in logistics and infrastructure-linked property. Trump's tariff war introduces a complex mix of headwinds, adaptive opportunities for the Australian property market. So while consumer caution and higher construction costs may dampen near-term activity, falling interest rates, long-term supply constraints, the shifting trade alliances, they could create fresh opportunities for informed property investors. And as always, market resilience will vary region by region, asset type, and of course, that buyer, that's you, buyer profile. As always, guys, I will keep you posted on all things property from around Australia as our year progresses. We're nearly halfway through. Don't forget to hit like and subscribe if you are enjoying the free content, and I will see you all again soon. Bye.